But I am so ready. I am so ready to transform all of you. But you have to be here. You have to show up and you have to engage and you have to study and you have to look at the shit and forget all the other shit you think you know. Put it all down. You'll believe me, I guarantee you, you will see right away there's something totally different. They have no sustainability, no consistency because they lack what it is that they're looking for all the time. Why? Because they're looking at fucking indicators. Indicators are always going to vary. Take, for instance, harmonic patterns. Okay. You want to trade the harmonic horseshoe crab. Okay. There isn't one that I'm being facetious because I can't stand this bullshit. And I wasted time and money on this stuff. Okay. Did I make money with it? Yes. Did I lose money with it? Yes. I found something better. I found the real market. All of that shit is nonsense. Nonsense. Cipher patterns, Gartley's, all that bullshit. You're worried about having all these ratios laid over top of your chart when you just simply look at the open, high, low, and close. What time is the fucking market trading right now? Okay, is it time to do something? All right, great. Was there a displacement? Have they taken the stops yet? Okay, where's the draw on liquidity? How fucking easy is that? How easy is that? That's fucking easy. That is so simple. But you're out here trying to figure out which fucking animal pattern, what ratio, what nonsense to lay over top of the price, which is beautiful. It's a beautiful piece of ingenious entrapment. Because here's what they've done with this bullshit. They're hiding price. And you're all out here fucking around, floundering, making a little bit of money here, because everybody once in a while wins at the casino. And they're all going to do what? They're going to pony up where they got it right. And then because of that, you get the online trade academy shit where supply and demand, this is the way the market works. No, it's not. Market profile, footprint, DOM. No, they're all gimmicks. Strip it down to a single candle or open, high, low, close bar. My eyes can't do very well with them anymore, but the open price, the high price, the low price, and the closing price, and time of day, day of week, what month of the year. All this shit matters. You honestly believe that these big fucking banks are putting billions of dollars on a fucking crab pattern? Are you kidding me? Are you fucking kidding me? You really believe? If you believe that shit, you just must turn this off and stop doing trading, because I guarantee you're not making any money. You're not going to be consistently profitable. You believe nonsense. That's fairy tale shit. That's nonsense. They're not going to put billions of dollars behind some nonsensical horseshit harmonic pattern labeled after an animal pattern. Think, folks. Please just stop and think. Do you really believe that investment banks are going to do that? Do you think they're going to be buying fucking diagonal trend lines? You think they're doing that? They're not. They are not. That's the bullshit that they've thrown out to all of you and me when I first started. And we chase all that shit. And we lose our money and say, fuck it. You know, it's just too hard for me. And I'm just never going to do it. Because they know that's 90% what happens. And you don't ever really investigate the clues that they have hidden from you by doing everything fucking opposite to what these books tell you to do. It's alarming to see people still believing all of this retail shit. Even after the years I've been out here doing this and showing it and proving it. All these other students now making real money with it. But they'll still tell you you shouldn't have monthly goals. Why? What are they missing? What's missing from their approach that prevents them from seeing a consistent market return or percentage, or why they shouldn't even aspire to have one. They don't have a model that repeats. They have something that evolves constantly. They're always moving the goalpost. That's always morphing into something new. They're changing this and changing that. Sometimes they use a setting on their indicator for this. Oh, I'm a price action trader, but they're still looking at other shit once in a while, but they're not telling you. How do I know? Because these same people are in my fucking shit and they're big wigs on Twitter. But because they're my student, they have to divulge things to me and ask me, hey, look, what about this and what about that? And believe me, I've been surprised to see some of these big wigs out here that you see. And I'm not telling you their name because I'm not going to do that. But you would be fucking surprised. They don't know what they're doing. And they still wrestle even after proving this logic. They won't let go of this dumb shit that they hold on to because their image is rooted on that stuff. They don't want to just say, you know what? I've made money in this stuff. I've lost money in it. I found something better. I found the real market. I found what really drives price up and down. What holds price in consolidation? I have those answers. Me, the boring ICT 50-year-old dude that used to be a pizza delivery guy. I got all those answers. And like Willy Wonka, I'm giving out golden fucking tickets this year and it's for free and you still are wrestling me. Dumb. Fucking dumb, man. They don't want to let go of their image because if they admit they're wrong, guess what that means? I was right. And they won't do that. I'm going to go here and this is where I should buy it. Done. Where's my stop at? It's going to be right there. I'm not opening it up. Once it's there, it's done. And I'm going to close it as the market moves in my favor or reverse it. And you're also going to look at the market and say, nope, I ain't touching it. It's bullshit. I ain't touching it. And you won't have any qualms about nothing. You'll just turn your charts off and go do what the fuck you want to do. Because you know, like today, it's shit show. That's what real traders do. That's what the real elite does. They're not out here fucking around with all this bullshit on their charts. They know exactly when they're going to do something, when they're not going to do something. How hard is that to understand? How hard is that to understand that if they are elites, they know exactly what you don't know. They know when to do it. And that's it. Nothing else. Everything else is bullshit. Everything else is a distraction. And it's something taking your attention away from the real moves. %. 6% is 1.5% per week. That is easy as hell. You can get that so easy. You don't have to do a lot. Your first year should be trying to control everyday trading. Everyday trading is a loser's recipe. You're going to get terrible results by doing that. But ICT, I want a demo. You failed. That's it. You failed. I'm telling you to not do something to test your discipline. And if you don't have discipline, you're forging it by doing this. You're creating something that you lack right now. Discipline. Well, why don't you want us to trade tomorrow? I'm not trading tomorrow. Oh, because you're not doing it, we shouldn't do it. You're fucking right. What am I waiting for? Thursday is CPI. Every time I've publicly shown this year, last year, I was dead wrong on where I thought CPI was going to go. I have to wait, just like you have to wait. The market's waiting for that. But you have to do what? Exercise personal responsibility and self-control and not do what it is you think you should be doing because it feels what? Counterintuitive, counterproductive. You're here to learn how to trade. So let me get in front of the market and do a trade. I should be doing that, ICT. No, you shouldn't. Think of it like FOMC rate announcements. The market moves around, yeah, but nobody's really establishing major positions ahead of that shit because it can go all over the place. And many times do the very opposite of what you would expect based on the release or the rate announcement or to whatever fundamental data they use. What's your multiplier? Because that's the number one thing. You have to have that. If you don't have a multiplier, you can't hit your percentage return. So what is your multiplier? Okay, close your eyes for a second. Not if you're driving. Think about the things that you've watched me engage and record entries on. Now, the entries may be similar to many other trades you've seen me enter on, but there is something that is always the same. I'm aiming for something. I'm either aiming for a fair value gap above where market price is if I'm buying. If it reaches up into that imbalance, that's where I'm unloading. Or if I'm bullish, I'm aiming for an old high or relative equal highs, something with buy side above it. I'm aiming for that because that's where the market's going to gravitate to. Every single one of these traders that will tell you don't have a monthly goal, they don't trade that way. That's my big discovery from everybody that crows and says that garbage. They don't trade like that. Their whole model is based on the entry. And I'm going to show you this year in live streams, the fucking entry is the least important thing. I'm going to purposely get in trades already moving because you're afraid right now. You're afraid of missing moves. And that's the least concern that you should have right now. There's so many fucking moves every single week. Every single week, there's so many opportunities for you to not have a fucking job. It's disgusting. But until I put your nose in front of it, hold you there against your will, kicking and screaming, and say, look at this, over and over again, then suddenly it's going to be like, oh shit, there it is. The whole time it's been there. And you're complaining, I don't know why it doesn't do this. And I don't know why, because you're making a mountain out of things that are not important. I'm taking your attention to the very things that matter right now. And you're asking me about fucking Eurodollar. You're asking me about dollar CAD. Those markets are not moving right now. There's nothing behind them right now. So I'm taking to a market that moves because it's moving efficiently. When Forex starts moving around again, the same things that I'm teaching you to look and study with ES, because I'm trading that with real money, that will work in Forex. All of this shit is transferable to other asset classes. I'm not co-signing crypto. My students say so. I'll leave it at that. I'm not a believer of that. Okay. I don't want to be in crypto. But if you're a futures trader or a Forex trader, the things I'm teaching you, they're applicable to both. The only element that's different is the time aspect. Futures starts at 8:30 and Forex can start as early as 7. But ICT, I've watched you take trades before 8:30. Yes, because I'm not limited to what I'm teaching you as a model. You're all now just learning how to do these things. I've been doing this for 3 decades. So I'm a little bit more experienced. I codified these concepts. So I mean, they're mine. So it shouldn't be surprising for me to be able to do more than what you've been taught as an introduction to this. And that's all this has been, is an introduction. So it's normal for you to feel those tendencies to be frustrated and feel like you're not getting it, or it's not as easy as you hoped it would be. You should be thankful that it's not fucking easy. That makes you superior. When you finally get this shit, it's going to be real hard for some of you young folks to not walk around and act like your shit doesn't stink, because that's exactly what it did to me. And you'll get humbled. Even being good, you'll get humbled. But 6% for the first year, that's your goal. 6% per month during the first year's development, that is your end year goal. So you should start your second year with 6% per month. And then you should move to 8% by 3 months into the second year. And then 10%. And I think you should live there for at least 6 to 9 months. 10%? Oh my goodness. I was watching some guy on what was the, I'm trying to think, Twitter. There was like a beef going on, and I was the real discussion about it all. But they were saying, oh, yeah, you can't make 10%. It's unsustainable, 10%. Man, what the fuck? I've literally made 23, 22, and 21% just in the last couple days per day. And you saw my executions. Hello. Yeah, 10% per month is a fucking comic strip. That's easy. That's literally easy as shit to do. It's not easy to do for someone to just walk through and took a casual stroll through YouTube on IC content. That's not realistic. Okay, so make sure you understand what I'm saying here. Year three, if you go through exactly how I'm showing you this year, 10% per month is absolutely doable. I don't give a fuck. I'll stand in front of the CFTC and say, yep, you can do that too. It can happen. It's easy. That part's easy. Why? Why is it easy? How can it possibly be obtainable? Number one, you have to know what you're looking for. What repeats every single day? Now, listen, if you've been eating Doritos and chips and you're watching some sports bullshit, okay, stop, because this is the part where it really starts to get good. What repeats every single day in the marketplace? Think. A rush for the market to go one direction or the other. Here's the wonderful thing. You can be dead fucking wrong at the beginning of the day on bias. Here's the secret. Listen. You can be dead fucking wrong when you're biased every single day at 9:30. Who gives a shit? Flip a quarter. If it heads, okay, I'm going to be looking to go long. If it's tails, you're looking to go short. And then you wait. Wait that first 30 minutes and see what they do. If you had a liquidity pool that they were aiming for, were likely to be aiming for, in other words, if you think that the market was likely to go up to take out an old high, run some buy stops, right? And the market just immediately tanks. First 30 minutes, this is going down, 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 down. Okay. Well, now you have a easy decision to make. Is there a fair value gap that decline has created and left in its porous wake? In other words, as it's dropped down, did it leave a fair value gap up there that it can go back up into? Some of you that are scalpers may say, okay, I'm going to trust a counter trend move and I'm going to trade up into that, and that's my trade for the morning. That's it, I'm done. Others would wait for it to go up into that fair value gap and then run to another lower low. That's a bread and butter setup. Both of them are. Which one would you personally feel comfortable doing? That's the problem with all of you. You want whatever I've done recently, that's the model you want to do. Much like when you now have seen multiple times now where I say a range shouldn't be filled in, or this is a balanced price range, my stop loss can be ultra tight, and I'm showcasing that and proving it and typing it out saying this is exactly what it's not going to do. And now you want to abandon every other pursuit in your learning to now discover that. Because if you could just do that and put that on YouTube and on Twitter and on Instagram, you're elite. That's bullshit. You're wasting time doing that stuff. It's not to say that it's not important to learn, because I'll teach it to you, but that's not it. You have to see what happens every single day. The market's aiming for liquidity. Period. That's happening every fucking day. Every day. And next week, I'm going to have an exercise for you every single day. You cannot do anything until 10 o'clock. And then we're going to be looking for a pool of liquidity above or below the marketplace. And you have to engage that for 5 handles. And you have to do it every single day next week. Oh, what if I fail? That's fine. That's okay. You're doing it. And doing it is like working out. You don't get abs the first time you did sit-ups. You're not getting a 6-pack abs just because you watch some guy on YouTube do them. You got to get out there and do that shit yourself. So this is how you do it. Every single day, the market seeks liquidity. That's the benefit in being these lower time frames, because there's so many fucking chances to do that. And 5 handles is 5 handles easily done. Now, let's return back to that multiplier. folks that don't have a model that repeats, that is absolutely generic, that keeps repeating over and over and over again, that's not linked to sound logic, but it's rooted in all kinds of indicator horseshit, they have no idea what pattern is going to set up next. They're just reacting to whatever the indicators are saying. They can't forecast it. They don't know when it's going to happen. Contrast that with, we know exactly when the fucking shit's occurring. We like the last hour of trading. That right there, some of you, that's the land of milk and honey. Because you have all of the day behind you, and you had that last hour of trading. If you see that last hour hasn't ran out a target that it's obviously aiming for, that last hour becomes real easy to trade. Or if it hits it in the afternoon session, and we start going into that 3 o'clock hour to 4 o'clock Eastern time, and there's a small little shift in market structure, and it returns back to a fair value gap, look for a pool liquidity on the 1 or 5 minute chart. 5 handles, done. But what if it goes 30? Who gives a fuck? You're aiming for 5. 5, okay? You're doing this to make money. You're not doing this to impress people on fucking social media. That's what some of you are you're more focused about that. That's the driver for you, because that gives you what? Significance. And I understand that wholeheartedly. Believe me, I understand that. But that is a pursuit that's wasted. You want to be making money. That's why you're here. You're not in here to impress anybody. You're here to make fucking money. And you can't make fucking money if you are not consistently doing the same things. And how do you do that? You have to have a goal. Let's say, hypothetically, that your goal is to get funded with $250,000, $250,000. Now, I haven't gone through the trouble of discerning how much it costs a funded trader to pay for the access to something like that each month, and I don't know. Okay, but you're welcome to tweet to me and say, this is what that company does here. To get $250,000, this is what you have to pay for. This is what you have to do, and the whole business. Okay, I don't know that. I'm just giving you some ideas to think about. Okay, but if you had $250,000 that you were funded with, whether collectively or individually in one prop firm, and you're aiming for, now you're in year 2.5 to 3 years. Okay, so you're looking for 10% returns per month. That's 2.5% per week. Now, some of you that are probably educators or mentors listening to this shit, maybe you're a professional trader, maybe you've been doing it for a long time, and you think, everything I'm saying is horse shit, whatever. I'm going to prove all this year. 2.5%. If you're telling me that you got in this business and you can't make 2.5% in one fucking week, what the hell are you here for? Like, what are you doing? 2.5%? Like 2.5%. You can't do 2.5% in a course of 1 week. If you've been doing this for 3 years, you're doing something wrong. And I'm telling you, you're doing it wrong. Less than 2.5 years, if you're thinking you're going to get 10% consistently every single month, then that's not going to happen. So let's be real, okay? Can someone that's been versed with price action do 10% per month consistently? Yes. How? How can that be done? Well, number one, let's strip it down to the basic math, and then I'll tell you how to apply your multiplier to it. So you have $250,000, and you're aiming for 10%. So you're trying to get $25,000 for that month. So you take your 25,000 divided by 4. That needs to be broken up of, now we're going to use just one market, and we're going to say my baby is ES, okay? E-mini S&P. You're not worried about what NASDAQ's doing. You don't give a shit what Forex is doing. You don't care what crude oil is doing. You don't care what Bitcoin's doing. You don't care about the new coin coming out. You are focused on one market. That's it. You take your 25,000, divide that by 4, and then you take that and divide that by 5 days. But you just sat down saying that everyday trading. Yeah, you're a new student. I'm trying to take your attention away from trying to be an everyday trader when you don't know how to trade right now. There's time for all of that once you know what you're doing. You can trade every fucking session after you know what you're doing. Multiple times in the same session, you can do it. You can buy and sell in the same session once you know what you're doing. But right now, you don't know what you're doing. You're going to hurt yourself. So if I'm going to teach you, I'm going to teach you the correct way. And that means I'm going to give you realistic time frames for when things should be expected. What happens if you do really, really well? Could you do it sooner? Yes, but that shouldn't be your goal. You should be doing this with the intent that you're going to do it with these timelines in mind, with the intent that you're going to get good with the proper amount of time to allow you to develop into it. Okay, 10%, Michael, that's a little too much for me now. Give me something more realistic. Okay. Let's say it's 3%. Ugh, a month? Come on, Michael. Seriously, 3%? Dude, that's like your stop loss. Yes, but here's the thing. $250,000. And if you have 3% as your model, you're aiming for 3%. Can you hit 3% in year one per month? At the end of it, yeah, I believe you can. Consistently, probably not every single month because you're still developing. But I think in the same frame of 2.5 to 3 years, I think 3% every single month is absolutely doable. What's the math on that? Well, for $250,000, and you're trying to get 3%, that's $7,500 per month. So you take that same thing, divide it by 4 weeks. And I know some of you are thinking like, this is anybody could do this is elementary math. Yes, but I want you to think about how you're not doing this. So it's so easy, you know the math, but you're fucking still working. Okay, you're still doing fucking oil changes at fucking Jiffy Lube. Okay, and you're going to talk to me in the comment section about how you say this and you say that. Dude, if it's so easy, you do it. You record yourself. You go on Twitter, say what it's going to go to next, and you do it. Okay, and I don't see you fucking flyboys doing that. So you got $7,500 on $2,500 equity. So you funded with $250,000. You're aiming for 3%. Now, some of you are thinking 3%, fuck that, that's not enough. Listen, folks, listen to the math here. $7,500. Are you making $7,500 right now at your job? Does your boss love you so fucking much that they're rewarding you for 40 hours or more a week in the tune of $7,500 a month? Chances are you're fucking not, okay? Now, some of you probably make more than that, and that's fine. That's great. Well done. You're still a slave. But $7,500, divide that by 4 weeks. It's $1,875 a week. Now, that's not a lot of money. That's not a lot of money, and that's an easy objective to reach, especially if you're working with $250,000. So you do the same thing. You break that up over points. We're doing with the S&P right now, okay? So if you take $1,875, divide that by $50. That's 1 point, okay? Or one handle. 4 ticks is one handle or 1 point in the S&P. That's $50. Divide that $1,875 by 50. That means you have to earn a net gain of 37.5 handles or points for the week. What? How am I going to do that? Well, per day, it's only 7.5 points. That's easy as shit. That's fucking easy. Now, you split that day of 7.5 points into 2 sessions. You have the morning session, you have the afternoon session. Divide it into lunch. You take a lunch hour, go play some PlayStation, Xbox, take a nap, whatever. Come back at 1:30 and work till 4 o'clock and aim for what? The same thing you try to do in the morning. You got 7.5 points that you got to make. That's your goal. That's all you're aiming for the day. You try to get 3.75 handles. That's 1 tick less than 4 handles in the morning and in the afternoon. So aim for 4 handles in the morning, aim for 4 handles in the afternoon, and that covers your commission costs. And you'll net 3.75 handles. You do that every single day. Or if you're a swing trader and you say, I can see something on the hourly chart that's going to probably move 40 handles, well, then you just do 1 trade and you're done. But you can split this up into small, little, tiny, bite-sized pieces. And if you've watched what I've been doing and you think that 4 handles is hard, you haven't been watching enough of my videos. You haven't been watching enough of my executions. 4 handles is nothing. Like 4 handles, that can happen in less than 5 minutes. 2 minutes. Like in some instances, on one minute candle, it can do 5 handles. Because I'm taking you into the time when the market's likely to move like that, aiming for a direction or a bias that's attacking a pool of liquidity or aiming for an inefficiency. You're not looking at indicators, you're looking at shit that repeats over and over again. So you could be taking that $250,000 account and parlaying that up to $7,500 a month, doing, around $80,000 a year. Not doing very much to do it. It's all about how you understand what repeats. I'm showing you these small little movements intraday, because when you look at all the social media stuff, they all show you these big, massive runs in price that they just got lucky with. I'm showing you week after week, day after day, 100 handle moves, 50 handle moves, 30 handle moves, and I'm talking to you right now about 4 handles. That's one less than the 5 handle model that my son uses. 4 handles, folks. That's easy. That's so easy. It's insane. And you can do just 1-to-1 gearing and it's done. You're trying to make 3% per month on $250,000. What happens if you do that same thing each month with that same $250,000 account and you let 3% compound over and over and over again? You're making 6 figures. You're not over leveraging ever. You're never going to blow the account. You're never going to wreck yourself. And you're never aiming for something that's too hard or anxiety inducing. 6% per month doubles your account size, no matter how you slice it. No matter what you start with, at the end of the entire year, if you compound 6% every single month, it's 100% return. You have $1 million account that you funded with? Okay, aim for 6%. Oh, but ICT. Oh, ICT shit. Okay, it's this math and sticking to the same multiplier. What's the multiplier? How do you get those 4 points? I know what you're thinking. Like, okay, this sounds all easy now. Tell us, how do we get those 4 handles? How do we get those 4 points? What have I been showing you? Aim for something. What's it reaching for? A pool of liquidity. Bias has nothing to do with it. Where is it at right now? Turn your charts on at 10 o'clock tomorrow. You're not trading. This is going to be a preview for the next week. You do not turn your charts on until 10 o'clock in the morning, New York local time. Find the most recent 5 or 15-minute high or low. What's the market done since the opening? And then aim for that. See which side's been ran out initially. If they've taken out the lows and it's been run up and it's created a short-term high and it's retraced, it's chances are it's going to do what? Run that high that just made. If it offers 4 handles, then you execute in not your demo, in your observance of watching price. You're going to tape read that. Well, what am I looking for? A fair value gap on a 1-minute chart. It will be there. That's the wonderful thing that you're going to discover, because all this stuff repeats on all these time frames. It repeats over and over again on all time frames, because price is price. And price is not really referring to the things I'm showing you in charts. That's the language that I've used to bridge your understanding and what you don't and won't know about the algorithm. See, there's a difference between people that will say with harmonic bullshit, okay, and retail logic splattered all over their chart, and say that's what the banks use. This is the algorithm. No, that's not. That's retail bullshit, and that's why it's failing you, and you're blowing out publicly. And I'm showing every single day precision at work.